Traders Nation, you've got 10 seconds to get your coffee, trim your phone in, kick the cash, make the bet ball with us.
Welcome back. You are tuned in to Traders Nation. Thanks for staying with us. I'm pleased to have back with us once again. It's always a pleasure. Mike Burnick with us here today. Mike, welcome to Traders Nation. How are you?
Thank you.
Good.
Nice to be back.
Always a pleasure, Mike. Mike, you're over at the Weiss Capital Management now. We'll talk about that at the end. A great group. Okay, Freddie Mac, Fannie Mac, Billy Jack, whack, whack. What's going on over there? Are you crying out loud?
Boy, I tell you, this kind of a market, it can really give you air sickness. You better keep those air sick bags handy with this up and down and crazy stuff. Of course, we're down again on a Friday, naturally a Friday, 200 points today, over 230 points on the Dow. And, all the worries are, again, focused on the financial sector, the same, cancer that's been eating away at the market for the last, 8 or 12 months now is just continuing to get worse by the day.
Pummeled.
Yeah, now it's Fannie and Freddie Mae.
Well,
Fannie Mae and Freddie Mac, these two companies combined account for about half of all the mortgage loans outstanding out there in America.
Yeah.
Trillions of dollars outstanding. And, of course, both of the shares are trading in penny stock territory now.
That's right. That's right. Now, listen, it's not good. I mean, we can have other areas that can take a hit. For instance, back in the early 2000s, telecom, which I coined telebomb, took a hit, but we kept moving. Country was fine. Hardly felt it, except for if you were in these issues. But now we're in a situation where you've got the financials are crumbling. You got the Fannie Mae, you got the Billy Jacks of the world, and they're not doing good. And that really is what is holding up our markets, is the financials. And when the financials are in trouble, are we in trouble?
Yeah, that's a great point. I mean, just a few years ago, financial stocks in the S&P 500 accounted for well over a third of the total market capitalization. It was actually close to 40%.
Yeah.
And in terms of profitability, same thing. Most of the earnings were coming in from these financial stocks because of all the securitization they were doing with subprime loans and other securities. They were the leaders of the pack. And, of course, that's not the case anymore. Actually, a couple of months ago, because of the huge, swift decline we've seen in financial shares, the technology sector, again, is number one in terms of the S&P 500 weighting, and mainly because of the decline in financials more than anything else.
All right, and here we go again, and we got less than a minute left, though. The cost to insure Lehman Brothers debt against default surged on Friday.
Right.
As stocks plunge for the second day in a row, so more troubling news for financials.
Yeah, I don't think we're going to be out of the woods on financials for quite some time yet. I mean, there's more, billions more in losses that these guys are going to take. I mean, global banks already have written off over $400 billion in credit losses and asset write-downs, and you're going to see more to come. We're seeing that now with Fannie and Freddie.
This is a type of wealth that's just evaporating.
Yeah.
By the heat of the falling and crumbling financial markets. All right, now, as always, Mike, where can we find you at?
Actually, I'm back with Weiss Capital Management as their Director of Research, and it's
nice.
www.weisscapitalmanagement.net.
.net. Again, that's www.weisscapitalmanagement.net. Head on over there today. And Mike, as always, a pleasure having you on the show today.
It's my pleasure. Have a great weekend.
You're more than welcome. All right, Mike Burnick, Director of Research and Client Communications over there at Weiss Capital Management. Can't find it, just simply Google it, okay? Weiss Capital Management Incorporated.